Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily SPY report for Wednesday, February 9th, 2022. Before we look at the charts, as usual, I want to encourage you to please click like each and every time you watch the Daily SPY report. It helps us out a great deal in terms of being found, Wicked Stocks being found on YouTube when people search for SPY analysis, S&P 500, and subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the Daily SPY report. And so being notified, seeing it early, certainly before the opening bell, is to your advantage for your trading and your analysis. So let's take a look at the charts. Just a reminder, once again, this is the big picture. You know, a few weeks ago, we closed below that channel bottom that is presently at 445.12. We are now back above it, have been for about a week. It is our sort of near-term support, and above which, once again, we can rally back into the upper 450s at 458.91 channel bottom in reach again over the coming days. As I've been saying, we could trade inside that wedge for a week or two, and we are fully 1 week into it. Both have been containing the market well, and in terms of the longer term dynamic, well, the long term dynamic by looking at this chart is still bullish. I'm talking long term into later year above that 399.94 to 402.51 area. But the kind of the near to midterm dynamic, there's still a big question as to what is likelier over the next 3 to 5 weeks. Is it falling back into the low 400 area, or is it pushing back into the upper 470s again, the December high or higher? The crude oil market, I'll mention that. I mentioned that in yesterday's Daily SPY. We've been testing a significant long-term overhead resistance, and we fell off over $2 a barrel at one point, almost $3 a barrel yesterday. I think that is part of what lended support to this market. It continued trading higher later in the day as crude oil continued south. I'm not saying that there's going to be a direct inverse correlation with those two. I'm just saying that if crude oil continues to fall back, I think they're going to find increasing support for the stock market in general, and then we may well close above that 458.91 area in the coming week or so. Let's take a look at near close-up view of the same formations, 445.12 below, 458.91 above, both able to contain activity through the rest of the week if tested. We came very close to retesting that 445.12 formation on Tuesday. We tested it last Friday. It held nicely. And in fact, the upside 458.91 to 460.12 is really a range. That is the range, actually, 458.91 to 460.12. And the downside is begins at 445.12 and ends at 442.15. That is a rising two-thirds speed line. It looks like a trend line off those lows, and it is essentially, but the actual math behind it is a speed line. So it's not really a trend line off those two lows. It's very close to that. It's actually a rising two-thirds speed line. It's trend defining, I think, as we continue into later February, holding above that narrowing zone between 442.15 to 445.12. We'll keep, once again, the upper 450s and low 460s in reach over the next 3 to 5 days. But if we close below 442.15, not only should we revisit that low, which is 420, what is that, 420.76. I think I say in the text 2 to 3 days. It's probably more like 3 to 5 days or by the end of next week that if we close today below 442.15, 420.76 in reach by the end of next week, and then over the next few weeks, 3 to 5 weeks, we could continue all the way south into that 399.94 to 402.51 region. Let's take a look at the support and resistance for today. We've got the 442.15 to 45.12 area I just showed. It is a narrowing zone of support able to contain weekly selling pressures, and above which that 458.91 area is in reach again within the week, over the next few days perhaps. Now, upside today, I got 454.87 as a respectable intraday resistance. It can contain initial buying pressures, and from there we could fall back perhaps into the mid 440s again, 445.12 on an intraday basis, but pushing or opening today above 454.87 would signal that 458.91 level on an intraday basis, which once again is kind of the start of a narrowing range of meaningful resistance up to 460.02 that can contain weekly buying pressures. And I've been saying that, as we close, if we close below 442.15, we have a sell signal into later February. If we close above 460.02, we have a buy signal into later February. So I'm kind of waiting for the market to tip its hand, and it would tip its hand by closing outside that range that I've already mentioned. Let's take a look at the consequences of closing above 460.02. You can see 479.88, that high from December. Then likely over the next 2 to 3 weeks, we could double top there nicely for at least a day, possibly a week, maybe several. But I do think that after everything that's happened over the last month or so, closing back above 460.02, this market is gearing up for new highs. I think by the end of March, we should then reach that 496.92 long-term trend line, which I've mentioned a lot in recent months, but not very recently because we are so far away from it. Let me take a look at the downside here today. If we do break 442.15, 435.03 is in reach, while closing today below 442.15 signals 431.24 within, I'm going to say, a few days. And by the end of next week, that 420.76 low from a couple of weeks ago would be expected by the end of next week. And then overall, closing below 442.15, I do think you should allow for the very low 400 area over the next 3 to 5 weeks. I'll remind you that the triple Q is still heavy below 376.28. Rallies up to that, short-term rallies up to that, are considered counter trend, and below which 376.28 expected over the coming weeks. 327.53 is in reach where we can place an annual low. And I'm just putting that out there to remind you that the triple Q itself, the NASDAQ 100, remains heavy below 376.28. And if it were to close above 376.28 in the coming week or two, I'm quite sure that the SPY would have already closed above its resistance at 460.02. So, there's that. I'm going to leave it at that. I'll leave you with the support and resistance for today. I have really nothing else to say. All the minor levels are carefully chosen for aggressive day traders. And 454.87 is our pivot point, below which 445.12 in reach, again, intraday, above which 458.91 expected. That's all I've got. Please click like each and every time you watch the Daily SPY Report, and subscribe if you haven't already. I'll be back tomorrow for Thursday's Daily SPY. You have a great day.